Hello, it is Wednesday, the 18th of February, 2009, and this is Brian Shannon from Alpha Trends. We had a pretty quiet day here today, actually. The volume was about average, but the NASDAQ actually finished with a gain of 2 cents and somehow continues to defy a lot of people's logic and not just completely get smashed in here. Looking objectively, we continue to be within this range of basically 28 to 30, 31 and a half or so. And looking down to the 30-minute time frame, the reason for continued concern here in the near term is that after yesterday's gap lower, the market was unable to push past yesterday's highs. And that level, of course, has been that 2960 level that we've been watching for the last couple months. That's been resistance and support numerous times here. We still have a declining 5-day moving average, so the intermediate term is guilty till proven innocent. If we drop a little bit lower here, the next potential level of buyers should show up at about 28.75, then the 28 level, and after that, then we could be in for a real mess, maybe down towards 26.80, and then a test of the lows. Looking at the weekly time frame, we're obviously still in a bear market, so nothing to get excited about on the long side. Just moving sideways is not a reason to think that it's time to buy, because again, we still have this 29.60 level here on the 10-minute time frame. You can see it with a little bit more clarity, that this is where the sellers have been showing up, and it's where the buyers were previously when they attempted to rally. So we're going to need to at least clear 29.60, and then we've got the declining 5-day moving average and all kinds of other levels to be concerned with. So a lot of reasons still to be concerned. Looking at the intraday time frame, we had an initial sell-off followed by a quick recovery that held above the VWAP. And then late in the day, we had very choppy action. So I wasn't trading it, which looking back in hindsight, I expected to come back to my machine and see the market a lot lower. But I'm glad to have not been here, because I think this would have been just a commission-generating event in here. And, the path of least resistance continues to be lower. No reason to look at this optimistically. The financials were basically flat today. They were unchanged here at 979. So we tied the all-time closing low, or at least as far back as what's relevant here. So we're down at 979, and I don't know if people are still calling for a bottom in here, but there's zero evidence of any buying, for more than just the 1 minute time frame. This chart's looking back to 1999, and obviously we're at at least a decade low. They were pretty stable in here throughout the day, but obviously we're still, even on this 10-minute time frame, showing a pattern of lower highs, maybe a higher low, but you can't become too optimistic about that. The bigger level of potential resistance right now in this market is about $8.60. That's going to have a little bit more meaning to it, because it's also where we now find the declining 5-day moving average. Nothing's really changed, not only in price for the financials today, but as far as the overall picture goes there. So the Russell 2000, this continues to be my favorite target on the short side. I was trading it and mentioned in numerous trades of the TZA early on, and for some reason it just seems like it ought to just get smashed. It hasn't done that yet, but we did lose 1.4% in here today, and probably the worst performer of the bigger indices. And in fact, it was. We're still below this important level that had attempted to hold before. So today we pushed below there. We've got this level now at $43 that we'll need to. If for some reason they decide to squeeze the shorts and get back above 43, maybe they can push it a little bit, but we've still got all these other levels to contend with, such as $43.60, the declining 5-day moving average, and a whole lot of other areas that will potentially be resistance. So this is, again, the more important short-term level. We've got a little bit of intraday support down here today at about $42.15. And again, I'm not sure why it doesn't just completely give up, but it sure seems like it should be following or seems to be following the action of the Dow Jones Real Estate ETF, that is the IYR, that we have this little pattern here that had broken down, and the IYR continues to be one of the worst performing sectors here recently, this week for sure. And again, if you take a look at that and look at where we are on the Russell, it's very similar looking, and I think it's pretty ominous as well. So short term, I think getting below 42.15, then maybe we get some further downside. But we've definitely got a pattern of lower highs, more repeated test of this support intraday. Makes it more likely to fall into alignment with the longer term time frame, which is obviously lower. So still continues to look very bearish in there. I'm not sure what's going to change that picture here. Fundamentally, it doesn't seem like there's any catalyst that's likely to change anything, and technically it's such a disaster. But you truly have to keep an open mind, because these short squeeze rallies seem to come out of nowhere, like they did yesterday afternoon right there. Today, this morning, we experienced a pretty good little rally. And if you're in that triple fund in particular, the TZA, that the point movements in there can be really big. That we had seen that the TZA, when it dropped, when the Russell dropped, we saw it go from 62.5 up to 67, but then it went from 67 right back down to 62.5 over a period of 2 hours. So you've got to be quick in there and pick your spots and trade reasonable share size. The S&P 500, let's take a look at gold actually real quick. Gold continues, as I've been saying, to hone in on that 100 mark, and it's tough to day trade, but today it was up and away here. It was pretty relentless as far as the buyers. It stayed above VWAP all day after testing it twice early on. Continued to squeeze higher in there. It is getting extended up here and subject to probably a big pullback out of nowhere that surprises people, but looks like it's headed for that, for par at least. And oil, let's mention that again as well, because the bottom pickers in here continue to be very frustrated. Today we had the USO lose another 2.5% of its value, and trading closing pretty much right at the lows. So once again, down 60 cents, and probably only 2 or 3 people that have bought the USO and are still holding it today can claim that it's something that's made them money. So picking bottoms is the hardest job there is. Trend remains lower, guilty till proven innocent there. The S&P 500 finally finished with a loss of 19 cents, and this market is the second biggest area of concern outside of the Dow Jones real estate, the IYR, and the Russell 2000, that it remains below this 80.5 level and seems like it should just drop somewhere down in here. In fact, I'm looking right now in the aftermarket that, let me see if I can pull this over here. I don't know what kind of news just came out, but you can see it's trading at 73 and a half. So continues to get worse in the after hour. If we can take a look at a tick chart, I don't know if my machine's going to freeze up because I'm recording as well. Hold on. Well, that's not going to work, but it's trading at about 78 and a half. I know that Baidu was reporting earnings after the close. I can't imagine that would have a big impact on the S&P 500. In fact, that stock is flat, so must be some kind of other news. It is trading to new lows here. Path of least resistance continues lower highs, and now in the aftermarket a lower low as well. So back to the daily time frame, it seems as though a test of these lows at a minimum is inevitable here. And looking back at the monthly time frame, there's really no level that looks like it would likely be defended. But once we get below this level here at about 76 or so, this was a little bit of resistance late in 96, support in early 97, and the next potential level would be right down near about that 69.5, 70. So the risk remain to the buyers. It's guilty till proven innocent in here, and the market is going to need a lot of time to heal all this damage being done.